Video I'm gonna be breaking down two losses. One loss that actually literally cost me my hair against a challenge against Alex, and another loss that I took, which was actually today from Monday. So I'm gonna also do a breakdown on gold, which was the most requested pair that you guys asked me to do a breakdown on. So two trade breakdowns and an analysis on gold. So let's get right into it. So the trade that actually cost me my hair literally was a sell on Friday. So the first things first, I'm going to draw the highs and lows of days that I had marked for this day, and then I'm going to do a top-down analysis so you guys could understand where my mindset was on why I called this trade. So if we're trading on Friday, the high and low of day is going to be coming from Thursday, which is going to be the highest and lowest point between Frankfurt and New York session. And it has to be a point literally in between the sessions. It cannot be a point in the middle of like when there's no session. It has to be literally in the color to make it simple. So this is going to be the lowest point right here, which is our low of day. This low of day right here. And then we're going to mark the high of day, which is this point right here, the highest point between these sessions. Notice I don't mark this because it is not in between New York session. So then now we're going to mark the previous high and previous low of day. So if we're trading on Friday, it's going to be two previous trading days before, which is Wednesday. So it's going to be the highest and lowest point as well between these sessions. So this is our previous low of day right here. Previous low of day, and then previous high of day right here. Just by marking this real quick, you guys can literally see how precise these areas are. Look, notice this previous low of day. Notice how New York, I mean, we didn't know it was going to be the previous low of day at that time, but you can see how these areas are specific. And you're actually going to see it right now in this breakdown. So you're actually going to see how pretty much to the pip, you can see this previous high of day right here, how it was used right here in London. But I'm gonna go over that right now. So before we get into that, so let's go to the weekly time frame now that we have our highs and lows marked. So now on the weekly time frame, let me mark this. Come over here. All right, so check this out. Notice how price touched this supply right here. Let me mark this. This supply right here. You can see this previous contrary candle that gave us this push to the downside. You can see as soon as we touched on the weekly time frame, for the past few weeks, we've been having a movement to the downside. So just keep that in mind. And then now on the daily time frame, notice this area of supply. That's the next possible target for price to pull back into to continue the sells. So I'm anticipating price to pull back into this area in the next few days. So we have this marked on the daily. Let's go to H4 because there's an area of demand here. We can mark this whole area of demand on the daily, but we want to be precise. You notice how this right here, like if we mark this like this, yes, it's accurate, but it's not as precise as can be noticed. Yes, this looks valid, right? Price touched it and respected it, but no. Notice how much cleaner we're going to make this right now. So we're going to go to H4, and then we're going to mark this previous contrary candle right here. I'm going to just literally use a line. That's all I need. Look at this. This previous contrary candle on H4 instead of doing it on the daily because we just went down a time frame to analyze and make it more specific. Notice how it was the previous contrary candle, which is by definition our demand zone or the supply, that gave us this push into the weekly supply. And then notice how we touched it right here. We got this rejection. So keeping all this in mind, now let's go to the H1. Actually, now let's go to the trade that we're actually trading on that day, which was on Friday. So that's it was right here this Friday. So let me do the replay mode. Okay, so check this out. Actually, let me go a little bit more back. Okay, perfect. So check this out. This is pretty much what I'm presented with when I sit down to do my analysis. And then let me show you guys what was my mindset throughout this. So I literally sit down to do my analysis between 8:30. So it was a little bit more. It was actually somewhere around, we'll just say right here. Got stuck. Like 8:30, somewhere around right here to be more specific. So this is what I see. This was actually literally 8:30 specifically because I remember this was news on Friday. So this 8:30 candle. So this is literally what I'm presented with as I sit down. Notice this. Let me break this down for you guys. Notice how I'm gonna break down a loss, but I promise you, me breaking down this loss, you're gonna gain more value than most courses, them just showing you some BS. So check out this mindset, guys. And notice this, how specific everything is. Notice how I just took the time to mark the highs and lows of days very specifically, how I marked the areas of demand, how I just marked everything. And then notice how I'm going to break everything down right now. So this is what I'm presented with, and this is what I noticed. So check this out. Notice how specific this is. Price during London, notice how it literally pulls back to the pip of this previous high of day, creates this area of demand right here. This area of demand. If you're a little confused on how I'm drawing my area of demands or supplies, check out my video in one of the videos that I posted before. I explain how I draw it specifically, so I don't have to make this video too long. But notice this area of demand right here that was created after we touched this previous high of day. And then notice that London gave us this movement right here, pulled back to this area of demand that was created, and then pre-New York as well. And then we're literally in between this area of demand and this high of day, this range right here. Notice how specifically. And then at 8:30, as soon as the news came in, boom, the volume came in. But where did the volume come into? If we go to H1, notice we have this void right here. This void right here. So price likes to fill voids. It takes time, but notice nothing is stopping price right here. So keeping all this in mind, the first thing that I see is this area of supply right here, this previous contrary candle. They give us this push to the downside. And then we also have this area of supply right here, which this area is more likely to take a trade from. Why? Because this is the true area of supply. This is the real previous contrary candle that gives this push to the downside. This is an area of supply as well, but it's below, but like they're both areas of supply, but the one that's always going to be more valid is the one above. So check this out. Keeping these two areas in mind and going on the M1 time frame. This is pretty much what I'm presented with price almost at these areas of supply. So what I'm looking for, obviously I'm looking for sells, right? I'm looking for price to reach these areas and give me an entry confirmation to take a sell. So keeping all this in mind, we'll just actually go to M5 and skip it a little bit. And now we'll break this down. All right, so check this out. Price touches it right here. And then on M1, now we'll go to M1. I'll show you what I explain as an entry confirmation, why I took the trade. So price touches this area, we still no entry confirmation off this area, price breaks it, so we delete it, right? And then now price is reaching this area. We're anticipating sells from this area, right? So now let's see what happens. Price touches it, literally touches it perfect to the pip. It literally just taps the area of supply. And then notice we're getting this volume to the downside. Price creates this new area of supply right here. This is my entry confirmation. If you look at some of my previous trades that I break down, like some of the wins, this is literally the same exact formula that I entered that we win the trade. Just this trade we happen to lose. So nothing is wrong with the strategy. Like this is a numbers game, but this is still a valid trade to take because it was in my trading plan. So notice how price touches this area of supply, and then we create this new area of supply right here on M1, which is our M1 confirmation. And then let's play it out. The trade looks something like this. Not something like this, exactly like this. Sell limit right here, like that. And then let's see what happened. Notice how price almost taps it, and then price would have almost, like, I think it would have been like let's see exactly, like a 1.4, but that's still nothing though. So this is still a loss. And then notice how literally price stops us out. We lose this trade, and then let's watch what happens. Literally price just uses this area as a demand. So you just, I just want to see if it forms like an area of supply that we could have used later on. Either way, we're not trading at this time. This is like way past our trading time. This is at like, well, not past our trading time, right here. This is right here is past our trading time. So let's just see what would have happened. Yeah, honestly, I wouldn't have jumped back in. Like, this is already past 11, but the only thing that probably would have been valid, maybe like another re-entry off of this area. That's like the only trade that I probably would have took. But that was the loss from Friday. So we had this area of supply on H1, and then our entry confirmation on M1. So notice how it looked on H1. Check this out. Notice how we literally needed a pullback. And this was the most reasonable area to get a pullback. We had our entry confirmation. It just didn't play out. But notice how then the sells did come on later on. So let's take this trade out. And then let's break down today's trade, which today's trade was straight BS. And you guys are going to see this. So let's delete this, and then let's delete this area of supply because it was used already. So check this out. Now we're gonna mark the highs and lows of days real quick. So let me hurry up because this video is already 10 minutes long. So check this out. Actually, I'm a to not make, all right, yeah, whatever, I'll do it. Ignore what I just did right now. I was arguing with myself. So let's do this. Now we're gonna delete this previous high of day right here and this previous low of day right here. And then now I'm gonna break down the trade for Monday. So notice how if we're trading on Monday, which is this day right here, our highs and lows of days are gonna change now. So now the high and low of day, which was Thursday, is gonna be the previous high and low of day. So it's gonna be this area right here. This point right here, previous high of day. I don't know why it moved. And then this point right here, previous low of day. And then the high and low of day is going to be coming from Friday. If we're trading on Monday, the high and low of day is coming from Friday. So this is the low of day right here. The most accurate time frame to do this, guys, how I always say, is M5. And then this is the high of day right here, guys. High of day right here. Notice how like these areas are not random. Price uses them very specifically, and I just showed you guys as well with this trade breakdown in the previous one. So you guys want to make sure you mark them correctly. So this is what we were presented with today. Let's do the replay mode, and this is what we're presented with today. Actually, hold on. Yeah, like this. Okay, so check this out, guys. So real quick, we go to M15. Notice this. London gave us this movement to the downside. Pretty much we're stuck in this range. This accumulation, manipulation, distribution, the definition of how I tell you guys to draw supply and demand zones, like valid zones. So this is a valid area of supply. So you pretty much just mark this like this. Or actually, let me mark it with the line so you guys can see how specific these areas are and how price uses them very specifically. So notice this area of supply right here. This area of supply right here. And then notice on H1 as well. H1 as well right here. So we have a H1 supply and 15 supply, and then we have price pulling back into this area. So what's the most likely thing to price do right now? If we're presented right here at 8:30, more or less right around here, and this is what we're presented with, we're gonna wait for price to pull back into this area. Same thing, give us an entry confirmation on M1, and then take the sells, because we could honestly buy with no end. Like we could buy impulsively, like for example, right here, like. We can buy impulsively right here, but and just knowing that price is going to pull back to this area, and yes, the trade would play out, but that's not being disciplined, and it's not in my trading plan. I don't take crazy entries, so I'm waiting for price to pull back here. If price would have gave me a nice entry confirmation, let's just say price would have broken, like let's just say for example, price would have pulled back and created an area of demand, then I would have took the trade to take me up here, but that's not what happened. So let's see what price does here. For example, notice how price just came in with all this volume. If it would have pulled back, and then I probably would have took a trade somewhere from this area here. So notice how price breaks past this H1 supply, and then we're pulling back to this M15 supply. Notice what price does as soon as it touches this area. Honestly, I paid the price for following my trading plan and waiting for an entry confirmation on this trade, because if I would have just placed my sell limit at this area, which I never do, I always wait for an entry confirmation, especially if it's a M15 from London. Notice what happens. Check this out. Notice, look at this price literally to the pip, guys. I can't make this up. And then notice the volume comes in from here, and then we create this area of supply right here. So this was my sell limit today. Sorry, excuse me. We touch this area of supply right here on M15. Notice how specific this is. I literally posted all this on my story as well before it happened, if you guys follow me on Instagram. So you notice this volume that created this area of supply. Price pulled back literally to the pip, touches it, and then we got this movement to the downside. I literally said in my story where price was going to pull back to this area and then give us a movement to the downside. And then notice right here, I placed my sell limit right here. Notice that I literally cannot make this up, guys. If you follow me on Instagram, you knew that, I mean, you saw what happened. So check this out. I placed my sell limit right here, like that. And then let's see what happens. Price pulls back right here, somewhere a little bit later. Let me move this like that. Check this out. Price pulls back, activates our orders. We're almost a 1-to-1 in the trade. And then price pulls back, literally stops us out, and then hits our take profit. Look at this. Literally, I cannot make this up. Like, we literally got stopped out to the pip. So this trade was still in my trading plan, and I would have taken this trade again if it was presented. Like, if I didn't know it was going to hit stop loss, obviously I'm going to take it because it follows my trading plan. And if you guys watch my other breakdowns, you could see how this is literally the same exact strategy. And just in these two trades, they happen to hit stop loss. But it's a numbers game, how I told you. In the long run, the next 50 trades is what counts. I literally posted my story, all the trades that I take with throughout 3 months, and you guys see that numbers is what counts throughout the long run. So I just know that you guys, obviously we're going to be able to pick up some value from these breakdowns. So that's why I did the breakdown on these losses. So now that we got this trade breaking down, let's do a breakdown on gold real quick. Yeah, this video is super long. So let's go to gold real quick. And let's go, same thing. Let's go like higher time frames, weekly, daily time frames, and I'm gonna break down some heat for you. So let's do this. So literally right off the bat, this is the first thing I see. It's pretty crazy. Notice this, right, guys? Notice this area of supply right here. This previous contrary candle that gives us this push to the downside. So we mark this like this, like that. And what does price do? So literally the same thing that Euro USD. This is just on gold. Notice price gives us this movement to the downside. Price pulls back into this area supply. Then we're getting this movement. We literally get like a bearish movement off this area supply that was created. So this is a very valid area of supply. And then if we go to the daily, let's just break this down a little bit more. So notice this, guys. Notice how the same thing on Euro USD. Notice how after touching this area of supply on the weekly, on the daily time frame, this is the daily time frame, we create this area of supply right here that we're getting near. So it's very likely, honestly, that we're going to see gold pull back into this area of supply and maybe give us a bearish movement coming out of this area. Obviously, you're going to wait for entry confirmations to take a sell from this area, but this is a very valid area. Imagine weekly supply, daily supply created after touching the weekly supply, and then look at the volume coming out. We have this void right here to fill as well. So that, and then notice this right here. This area of demand right here. Area of demand, no, right like this. Area of demand, this previous contrary candle, like it was this push into the supply. Notice this previous contrary candle, push into the supply, price pulls back, and then you can see that this is what price is using right now. So this is the range that price is stuck in right now, this area of demand, and then we have this area of supply that we're possibly going to get sells from right here. Let me go to H4 real quick. Okay, so going on H4, this is why I always like to do a top-down analysis. If we're to break it down a little bit more, price can honestly pull back into this area right here. It's actually very likely price is going to pull back right here. This area of supply right here that was created in the weekly zone, H4, notice this big void right here. So this is a very nice area of supply. Price is going to pull back into here, and very likely we're going to get a sell movement coming out of this area. So that's what I expect for gold for the next few days. I hope you guys enjoy this breakdown. Leave a comment, follow, subscribe, and I'll see you guys in the next one.